Thank you for tuning in to another edition of the Vulcan Report with yours truly, the Algo Capitalist. Today is Tuesday, April the 24th, 2018. Jumping right into the thick of things on the weekly chart, the Bitcoin futures doing exactly as anticipated, getting up here to the first resistance line, which is at 10,187. I've been telling you that for the past couple of weeks. Market is hanging on to that momentum. We'll see what happens when it gets up to the first resistance area. That is a very strong resistance. If it can get past it, the next target is 13,306, the long-term resistance line right here. All right. So right now, fireworks are on and popping. Bitcoin futures is at 9,700 right now and climbing. What happened to the equity market today? Is this the beginning of something big? Well, to be quite honest, we really don't know the answer to that question yet. All I know is we've been waiting patiently for the market to do something. And last week I told you that it was a very critical juncture where the markets were at, and that it was either going to turn the tide and rally from here and say the lows have been put in, or it was going to crash down. Well, today the market decided it was going to crash down. Shorts were definitely triggered. This rally was sold, and down goes the market. Coming down here to test support lines, the long-term support line down here. I must say, the more we test this support line at this juncture on the weekly chart, the stronger the chance is that the market is going to break below it and miss rampage coming up here and toward the end of July. Therefore, a drop below the Kumo cloud is what we're looking for right now. All right, red alerts are popping up. Can't ignore those crash alerts, folks. As you can see, on the daily chart, market retraced from the lows here. We got up above the longer term resistance line. Market popped up above the cloud, remained there for 2 days, and then just gave it all back. All right, and then some. Market has crashed back below the Kumo cloud, which is a dangerous place to be. If you go back here, you see came below the cloud, and what happened? The market fell apart. Here we are now below the cloud, and the market is in jeopardy of falling apart. It looks like we're going to do a repeat. We've been seeing repetition of patterns in these markets for some time now. Here we are right here. All right. You got a 3-bar Charlie setup, and it's looking like a repeat here. All right. So the last time this happened, crashed below the Kumo cloud on the first bar, retraced on the second bar, and then the third bar was it. We legged down. Here you go now. Technically speaking, this is 1, this is 2, and now this is the third bar. All things being equal, we're looking at a possible 200-point drop from here. All things being equal. All right. And this could be quite substantial. I may be even lowballing it. But right now, the NASDAQ 100 is in jeopardy of falling off the cliff. The news in the tech sector is not helping. Taking a look now at the Dow. Let's take a look at the Dow. All right. I can get this off of here. Okay. As you can see, further extension down for the Dow, and then here we are now. So the Dow tried to hang up there, tried to get above the Kumo cloud and could not, failed in the cloud, and now here we are breaking down below. The next leg is being put in now. So we should see an acceleration to the downside here. All right. And then when you get out here to May, you have significant downward thrust. All right. So that's what we're looking at in the equity market. Let's throw the semiconductors in here. Semiconductors are not helping. All right. That is not a good sign when you see 4 bars down like that below the Kumo cloud and you have an expanding momentum. All right. Accelerating sell-off. Not a good thing. If I pull up the weekly chart on the semis, you can see where it's in danger of dropping below the long-term trend line support. All right. It's already lost momentum. Okay. Several weeks in a row now, no momentum. 1, 2, 3, 4, 5. This will be the 6th week in a row of negative momentum and acceleration to the downside. As this downtrend channel is starting to really come into play now. It's really developing. We're possibly locking in here on the negative side of things, okay? Taking a look at the XLF, the financial sector, on the weekly chart, you can see it's been struggling to regain momentum, and it's not working. On the daily chart, let's see what's happening. It's really struggling to maintain a bullish stance. Every rally is being sold, 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 and now it's trying to stave that off. All right. There's a war going on right now. The market's trying to regain that bullish sentiment and is failing to do so at this time. Taking a look here at the bond market. All right. Falling off of a cliff, but you're in a bear market, so that is expected. You had a nice bounce, technical bounce off the lows, resistance line acting as it should, prices obeying, all right, the overhead resistance, and then here we are crashing down, getting ready to pop into new lows. Taking a look at the US dollar index. April 14th has come and gone. There was, of course, fake news talking about the death of the dollar by April the 14th and all this other stuff, and it's foolishness. Every time people talk out the side of their neck, the market punches them in the face. As you can see here, the dollar broke above 91 briefly, and now we're at 90.79. The market is doing exactly what it's supposed to do. The Trump White House policy is 89 to 91, and that's what the dollar is doing. Maintaining that balance of trade. All right, that's what it wants. Import exports needs the dollar to be at a certain point, and that's exactly what they are getting. No more, no less. Taking a look at gold. Gold and silver really disappointed. They're disappointed because we gave them the benefit of the doubt, and we just lost momentum. Thought we were going to break out of this long range. It's been in this range for months. Can't seem to break out. Every time it looks like it's going to break out, it's sold. Rally, sold, rally, sold, rally, sold, rally, and sold. Very disappointing at this time. And to be quite honest, it's looking like here it really looked like the trend was going to come to an end. Now, it's taking that dip down again, and it's skating dangerously close to the edge, like it could fall apart. Trend line is really trying to get away from the cloud top side, but struggling. So it's still a wild card as to what's going to end up happening. with this gold. Looking at silver, silver is extremely disappointing because, as I showed you, the cycle did not stop. I was really hoping that when the longs triggered, that this time the market would be able to break out of this pattern. But as you can see, it does not look that way. All right. So it gave a false start. Here we have rally and crash 1, rally and crash 2, and I should have pointed it here, missed one. We rallied and crashed again right here. All right. So you got 1, 2, 3, 4, 5, and now this is the 6th major time. All right. And really it's been more than that because you also rallied and failed here, and you rallied and failed here. So silver's just been the fat kid on the playground that keeps getting kicked in the tush, and he falls to the ground and all the children laugh. 1, 2, 3, 4, 5, 6, 7, and now we're looking on the 8th time. Every time it gets up here, it fails miserably. It struggles with the $17 handle. It's struggling with 17. It cannot stay above 17. It just can't do it. It tries and then it fails. All right, so 17 is the magic number. Every rally is sold in silver, and the trend has not stopped. It hasn't stopped. Every time it rallies, it crashes. Every time. Going all the way. Look, I'm going back. I haven't even changed the circles, and each time it's still the same. It's this trend has been going on forever. All right. Every rally is sold. Rally sold. Rally sold. Rally sold. On and on and on and so forth and so it won't stop. So unfortunately, folks, we're just gonna literally just have to just play the hand that was dealt. Now, for those of you that shorted this, that got out of the longs and stopped and reversed, good for you. That is the proper way to use the pulse waves. Pulse waves alerted us to the possibility of a crash alert on the gold and the silver on the day that this happened. If you pick up the daily chart, you'll see it. Those of you who subscribe to the weekly pulse wave price triggers, you got this warning. So when you moved your stop to break even, you would have gotten out of that long position. Or if you use the recommended intraday price inflection point as indicated on the sheet, you would have got out around 1702. And if you chose a short, then you would have been short from the 1702, and you would still be in the trade and tightening up your stops or what have you. What can I tell you? It's just the way the system works. All right, so the system protected us in our long position, so you would have gotten out either break even or you would have gotten out with a small profit when those longs reversed. So that was a nice little quick trade. I was hoping it was going to be a longer swing trade position, but it didn't give it. It didn't give it to us. It only lasted not even 24 hours, and that was it. But we made it up today in the NASDAQ 100 shorts. So what can I say? That's the way the market works. Sometimes trades don't develop. It looks like it's going to do something. You get a head fake, boom, and that's okay. That's fine too, because that's why we short. That's why we like the pattern recognition algorithm in the post wave price triggers. That if you are wrong and the trend does not continue, you get out at break even or minimum loss, or in some cases small profit. Even when you're wrong, you still make profit, and then it gives you the opportunity to get short if longs are stopped out, or to get long if shorts are stopped out. That is the majesty of the pulse wave price trigger system, because the algorithms alert you ahead of time, even when it's not apparent on a chart. Sometimes you can't pick up everything on a chart. You have to have the algorithms to tell you what's happening in the undercurrent of the market, what's happening in the option side of the market. What are those put call ratios looking like? What is the news looking at? Is there any report that may be coming out that's going to change? There's a saying that everything that can be known is already known in the price. That's not necessarily true. It's true to a point, meaning that somebody somewhere knows something that the general public as a whole may not know. And then when that information comes out, sometimes it can shock a market. We've seen that happen. President gives a press conference, unexpected says something, market gets spooked. Or a breaking news thing comes out, market gets spooked. Like the thing that happened with the airline when the engine failed and, a person was killed, passenger was killed, sucked out of the plane, whatever. I won't go into that right now. I will save that for the next video. All right. So with that being said, remember pulsewavetrading.com. If you want to be alerted to rally possibilities and crash alert possibilities in any given market, that's what the pulse wave price triggers are for. To know when markets are set to rally or crash ahead of everybody else. That's what the artificial intelligence software does. It seeks out and searches for those situations in a market that is not known just by looking at the charts. Pulsewavetrading.com. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace.